Hey, everybody, welcome back to Whiteboard Finance. We've got something really interesting happening in the markets right now. Gold is absolutely crushing the S&P 500 year to date, even while the stock market is in one of the strongest bull runs we've seen in decades. Time to shill some gold, baby. Yeah, I'll get to those comments from about 6 months ago here in a second. So today I'm going to break down exactly why gold is skyrocketing, why stocks aren't keeping up, and what it means for your portfolio moving forward. Let's dive into it. So right here, I have a chart on tradingview.com. The purple line is gold, or GLD in this case. It's just the gold ETF. And then you can see these little candles right here. This is the S&P 500. So it's going to be hard for me to zoom in, but you can see here S&P 500 is up about 11% year to date, which is still great. But gold is at 37%, okay? We're talking about almost a 30% difference here, a 27% difference. So why is this happening? But before I get into that, I want to comment a little bit on these comments from the people that know everything in the comments section. I came out with this video on March 13th, 2025, with a pathetic 27,000 views, but it's okay. It's okay. Your boy's still going to keep grinding. So March 13th, 2025, I made a video talking about why gold is surging to $3,000 per ounce. At the time of the recording, it was about $2,946 per ounce. And if we go into the comments that I want to address, it's kind of funny. One of my sponsors is JM Bullion. I've been buying gold from them for literally 10, 11 years now. People are saying, oof, come on, Marko, you're better than this. It was cringe enough that you've been shilling gold in recent videos, but this video crosses a line. Yeah, the video crosses a line. Let's see how the line that I cross. Let's pull up ChatGPT here, buddy. So I asked it, what is the annualized ROI, return on investment, if gold went from $2,950 to $3,650 in 6 months? So that's an annualized return of 53.1%. So the person in the comments, they basically lost out on 53.1% annualized return, which is just ridiculous. Okay, if I was a hedge fund manager, I'd be the greatest of all time, except for Jim Simons. Shout out to Jim Simons. But basically, I'm just saying that tongue in cheek. These people would rather like argue and be dumb in the comments than just build generational wealth and be smart and just shut up and listen to me. Guys, listen to me. I am the guy with the camera. I have 1 million subscribers. You know, I'm just kidding. No, all joking aside, I've been studying this for a long time, you guys. Just pay attention because I wouldn't talk about it on my channel if I didn't think it was important. So what is going on here? So the S&P 500 has been up pretty significantly, basically since Liberation Day. It's up 1,650 points in basically just under 5 months. Insane rally, okay? Absolutely crazy. But gold, it's actually up 37% year to date, which I just showed you. That's nearly 4x the S&P 500's return. I mean, that's a little bit sensationalist, but 30% is a big difference, you guys. So since 2023, gold is up 100%, while the S&P 500 gained only about 67%, which is still great. I mean, these are still incredible numbers. There's no right or wrong answer here. And this isn't, again, I was just joking around in the beginning. This isn't to shill gold, but it's important to be diversified. That's the whole point of this video. And I'll get into why gold is actually going on this tear later this video. So even though this AI revolution is going on, ChatGPT, all this stuff, with China, gold is still outperforming pretty significantly, you guys, okay? So this is since 2023. So what is going on here? Why is gold on a historically, crazy run? Why is it historically a safe haven? And why is it suddenly outpacing stocks during a bull market? This isn't some, 07, 08, 2020 COVID thing. This is in the middle of a huge rally. So let's take a look at gold versus stocks and the correlation shift we have. So traditionally, gold and the S&P 500, they move in opposite directions, okay? Stocks go up when times are good. Gold goes up when investors are scared. I think there's a little bit of both going on right now. People don't know where to put their money, right? They're going to cut rates here in about a week at the time of this recording. So not only are treasuries going to yield less, also your savings accounts are going to yield less, which makes that hurdle rate a lot lower, right? You're going to want to get into something like stocks, especially when inflation is high, which we'll talk about here in a second. So gold goes up when investors are scared or when there's inflation and uncertainty, but something has changed right around 2020, as you can see right here, right after COVID. So by 2024, the correlation coefficient between gold and the S&P 500 hit a record 0.91. So this is actually the highest ever recorded. This means that stocks and gold are now basically moving together, okay, almost in a one-to-one lock and step, if you will. So this is something we've almost never seen before. So what is going on? Is this signaling a huge macroeconomic shift? I don't know. But let's see, what is driving this? So I think there's two big forces at play. So we have deficit spending. So the U.S. is running nearly a $2 trillion annual deficit. And then this is flooding the treasury market with debt. And number two, it could actually be long-term inflation. So investors don't believe that the Fed is going to get inflation back down to 2% anytime soon. So as treasury supply grows, bond prices fall, and bonds, they lose their reputation as kind of that safe asset. So guess what's going to replace them? It's gold, okay? And I'll show you why I think gold is running here. So if you look at central banks have been scooping up gold for a long time now. So if we look at here, this chart is showing foreign central banks hold more gold than treasuries. So this is basically central banks around the world are dumping treasuries. They're buying gold at a record pace. This is for the first time since 1996, which you can see right here, where this yellow and blue line coincide or intersect. Real quick, just so I know it's the font is kind of small. Yellow is gold holdings as a percentage of foreign reserves. Blue is U.S. Treasury holdings as a percentage of foreign reserves. And you can see basically since 2015, blue started to go in a downtrend, gold started to go in an uptrend, and it really started to spike up basically in 2021, 2022, right around here. That's when this big spike started. And this is happening for the first time since 1996. So the writing on the wall, in my opinion, is you have these rising deficits, inflation that's sticky, okay, a U.S. dollar slowly losing dominance in global reserves. This is a long-term macro bet, and they're going all in on gold. So term premiums and inflation expectations. So the U.S. Treasury term premium, this is the extra yield investors demand for holding long-term bonds. It basically just hit 0.75%. This is the highest since 2014. So long-term inflation expectations are climbing. So markets are finally realizing that the Fed's 2% inflation target is probably not happening anytime soon, okay? And gold, it thrives in this kind of environment. But this, to me, this slide right here, this is probably going to be the most important one. And basically, we kind of touched on this just a minute ago, but I think that this is important to talk about. So if you look at this slide right here, you can see that the global international reserves, this is basically including Q1 of 2025. You can see that the gold, obviously the gold colored bar, from 1978 to basically 2008 was basically in a downward spiral, okay? Like no one was holding this stuff. They didn't care about it. And then after 07, 08, you can see it tick up just a little bit where my cursor is. But if you look at since 2012-ish, you can see that it's spiking up. And then if you look at 2025, this Q1 right here, I mean, it's at its highest level since basically the early 90s, okay? I think that's pretty important. So governments are cutting rates to support weak economies, okay? We're going to have a rate cut here pretty soon. They're spending aggressively, even as inflation lingers. And then investors, they don't trust bonds like they used to, okay? So capital is rotating into gold. It's going into Bitcoin. Bitcoin's like $114,000 at the time of this recording. People were making fun of me when I was talking about it when it was like 10, okay? So gold's share of global reserves is climbing, which I just showed you, while the US dollar share is falling, okay? What is my investment thesis? So I basically still believe that we still have the deepest capital markets in the world. I still think that US dollar dominance is strong, okay? What other currency are we going to use? Are we going to use the renminbi? Are we going to use the euro? Are we going to use the Russian ruble? No. So unless these BRIC countries can really get their stuff together, they're never going to overtake the United States, at least in the next 10, 15 years. The other thing we need to think about is with these BRIC countries, so Brazil, Russia, India, China, South Africa, look at their leaders like Belarus. Lukashenko's old. He's in his 70s, I believe. Putin's in his early 70s. Modi is in his early 70s. Xi Jinping, early 70s. All these people are the same age, okay? So who knows what's going to happen in the next 5, 10 years? These guys aren't going to be around 10, 15, 20 years from now. They're going to be dead or ridiculously old. At that point, are they still all going to be on the same page as they are kind of right now? So unless the BRIC countries get their stuff together, my overall thesis is that the United States and the U.S. dollar dominance is still here to stay. That's why most of my portfolio is in U.S. equities. And then also, time to shill a little bit of gold, baby. Let's get into the JM Bullion spot right now. At the time of this recording, gold has outperformed the S&P 500 by over 30% year to date. I buy all of my gold bullion and precious metals from JM Bullion and have been doing so for 10 years. I allocate a percentage of my net worth to gold and think of it as an insurance policy on the rest of my portfolio. So during times of unprecedented money printing, aka right now, gold is a smart choice to preserve your purchasing power. JM Bullion is one of the biggest precious metals dealers in the United States with over $11 billion in precious metals sold and more than 6 million deliveries completed. They have over 400,000 customer reviews with an impressive average rating of 4.8 out of 5 stars. Join millions of satisfied customers who trust JM Bullion the same way I have for 10 years now. Make sure to use my link in the description so they know I sent you. Happy stacking. So with all that being said, I still diversify. I have about 20-something% of my net worth in Bitcoin. I've been buying Bitcoin every week, every day since basically 2018, January of 2018. I bought Bitcoin at $3,500. I bought Bitcoin at $124,000. I buy it all the time. Gold. I've literally been buying from JM Bullion for 10 years now, 11 years now. Equities, U.S. equities, some international, some small cap, mostly large cap. And then also real estate, and then cash. So hopefully this was important to you because I do think that a lot of the world is waking up that, hey, United States, yes, we're still the strongest empire in the world right now, but we may be a little bit late stage empire. Who's going to be next? Most likely China. And do people trust China? Probably not. But what does China do all across the world? Look at their Belt Road Initiative or whatever it's called. They're basically reinventing the Silk Road. They're going all the way from basically China all through the Balkans, and everything in between. They're recreating the Silk Road. They have 99-year leases on ports in Greece. They're building trains, highways, everything all throughout the world. So I don't know. Maybe the trust is there. There's a phrase that says, when the United States visits us, we get bombed. When China visits us, we get a new hospital. So time to think about that a little bit. I think there's a lot of Western propaganda against China. I don't know. That's just kind of what I'm seeing. So I'm trying to keep an unbiased, neutral viewpoint. But again, it's kind of like, hey, Marko, shut up and show me your portfolio. Most of that is in U.S.-based equities. So hopefully my lifetime will be okay. I don't know about my kids or grandkids. Hopefully this was enlightening. As always, I just try and provide as much value as possible. Please like, comment, subscribe, hit the bell for notifications, and share this with 13,000 friends. Thank you so much and have a prosperous day. Marko, Bitcoin is digital beanie. What? Hello? What? It's digital beanie babies. It's just me. What? I can't hear you. What? Hold on. This private helicopter is too loud. Hold on. But Marko, Bitcoin just made up. Gold is just use it. What? Hello?